Alicia Reese from Wedbush, $115, I think, price target on the name. Correct me if I'm wrong, Alicia. What are you going to be most looking for on Tuesday night?
I think Netflix has a real opportunity to show how their business has been tracking and focus on the core businesses. There's obviously that stock overhang from the pending M&A. They have an opportunity to really dig into the numbers since they stopped reporting their subscriber numbers and show that the churn is very low, very small churn. Subscriber retention is great, give great guidance for 2026. We see some really good subscriber retention and returns in Q1 from some survey work that we've done. And most importantly, we want to see that advertising has expanded and that they've been able to leverage all these live events and all this great content and content spending that they've done to show that their ad product is expanding rapidly and going to be a meaningful contributor to profitability in 26 and beyond.
This is probably a stupid question, but I have Vecna on the brain, and if that statement means something to you, understand. Yeah, see? Stranger Things. It was a phenomenon. Yes, and it wrapped up last quarter. Is that going, I mean, could we literally see a one-quarter Stranger Things pop? Because now it's gone.
That's not what we saw in our survey work. Our subscriber survey work showed a really steady subscriber number for the fourth quarter. And importantly, you saw people who have not had the service in at least 3 months wanting to come back in droves. So people who might have missed Stranger Things and were busy over the holiday period, but now want to catch up on what everyone's talking about, want to see WWE in 2026, or maybe some other content that's coming back. Bridgerton, for instance. There's so much content for everyone. You're going to see this quarter over quarter, and Netflix is not intrusive with its ad policy, very low ad load. And, they're able to pick that up. They have a lot of flexibility with that. Advertisers are really starting to come on because there's a lot of data leverage that they have now because they have their partnership with Amazon and other DSPs that are really helping them.
Do people mind the ads, or they're going to pay up for the ad-free version, or they're just going to pay the least they can, but make it up on the ads?
Yeah, they actually have, like I said, the lowest ad load of any streamer or, of course, any linear TV. And so it's really unobtrusive. People don't mind. And what we're seeing in our survey work is that the ad tier is getting really great retention, more so each quarter that we go along, and people are switching less. They just don't need to because it's not a really difficult experience for them. And Netflix, I do think, has some more flexibility to increase the ad load slightly, and I think they will. It is profitable, of course, and it will be helpful, but it's not bothering the consumer at this point.
Yeah, I mean, I guess here's the weird news. Streaming is starting to look a lot like just kind of regular TV, right? You got ads either in the front, sometimes in the middle. But here's the reality. Netflix stock, Alicia, as you know, it's at the exact same price it was 1 year ago. Is this still a money maker as an investment?
It is, with or without Warner Brothers Discovery. I think the advertising opportunity is so huge, and it's now being overlooked. All the core businesses being overlooked because of this M&A overhang. Now, of course, management is a bit distracted, of course, with this whole M&A deal. They're not buyers typically. They are builders, but they have not stopped building. And I think the reality of that will come to fore in their earnings report and the guidance that they're able to give that is obviously sans Warner Brothers. If the deal goes through, I think they'll increase production from both, both houses and really be able to leverage that ad opportunity once they get that integrated.